Hey everybody, welcome to the Bitcoin pricing model analysis for Brave New Coin. I'm your host, Carl, lead trader and portfolio manager at Techemy Capital. Quick disclaimer, this video does not constitute financial advice and is intended for educational purpose only. Before we get started, guys, just quick reminder that our All Enzyme Bitcoin Ethereum hedge fund we've moved away from it. We have a new wallet on Polygon. The link is within this video, so please make sure you check the description of this video and move your funds to the new Polygon wallet. And if anybody likes my trade management, risk management, and the videos, and you feel like you want me to trade for you, so you can definitely contribute to the Polygon wallet, and I'll trade Bitcoin, Ethereum accordingly for you. All right, let's move on, guys. Let's dive right into it. It's been a while. I didn't really see any need to put a video out because the market has been in sideways since the last video. Really, nothing has changed. Actually, the only thing that changed are the macros. They look much worse than previously. But anyways, let's get started. Let's dive right into it. There's nothing here that will fit my bias. I'm going to give you a really neutral standpoint of view perspective of what I'm seeing, and please make as you wish from it. Let's start with the 200 weekly moving average heat map, which we're all familiar with. Now we look here, as we get more data, we see that Bitcoin for the first time in history in an extended manner is trading below the 200 weekly MA for 3 months and a half. Almost. That's a long time, guys. This has never happened before. To be honest, if we're above it and riding it, I would say we're bullish with conviction. But in this case, we have been trading for the first time in history below it. It is bearish, and honestly, I'm still expecting another leg down, unless we can see Bitcoin regain that 200 weekly MA, which is right now 23,600, and manage to close a weekly and preferably a monthly above it, well above it. I would say I would like to see 25Ks taken out. So I would like to see, first of all, 23K tested if the bulls can do that, and regain 25Ks and close a monthly or weekly above it so I can turn bullish. But right now we are trading below it, and many traders are not telling you this, but those guys who have been bullish from 40, 30, 20Ks are still telling you this is the bottom. I don't know. There's nothing with conviction that says that, guys, especially with the macros that we're in. I can't see this. The bottom does look similar as a pattern, like Adam and Eve, bullish reversal pattern for a bottom, but we are trading below the 200 weekly MA, so we have to trade with caution here. So if you're buying here, you will want to buy 19,100 or so. I prefer that. I mean, it's a low risk risk trade. So if you buy in the 18Ks, you can put a stop below that, like at the all-time low, which is at 17,500. Way below that you can put a stop, and if you're buying at 18Ks, and see what happens, right? So if you're dollar cost averaging in, that's the only trade I would take, honestly. So if you're bullish, you want to try the bullish setup, there's no wrong into it, but yeah, so I would say that's your trade, and put a stop loss below the low. From my end, I'm staying flat. There was too much risk I'm seeing ahead. I can wait a little longer and see what happens. All right, so that's the 200 weekly moving average. This is very historically different from previous bottom. So that's a takeaway from this chart. All right, let's move on to the 2-year multiplier. So this chart is fairly simple. This model highlights the periods where buying or selling Bitcoin would produce amazing returns. In this case, we're looking at the bottom here. The previous bottoms that were in the bear markets, you see we're in the previous bear markets have ended. The bottom was in the green area. In this case, also the previous bottom on 2019 was around 3,400. And currently we are in that green area, which indicates a great area to start dollars cost average in, assuming that this is the bottom, similar to previous bear markets. Now, again, all those models, remember guys, they don't account recession. We've never been in Bitcoin the past 10 years or 12 years where I've never seen Bitcoin in recession. So these models really exclude recessions. This is something to keep in mind. So that's why I'm still kind of expecting we could see another leg, a last and third leg down to 10K, give and take, and 12 to 10K. And that would be a great area to actually buy more if you're DCing in. So right now, this model, it tells you, yeah, sure, you can buy here 10% or more, whatever you feel like. Can we go down further? Yes, we can. It's all about patience. So yeah, let's see what happens. Bitcoin rainbow price chart. Well, you know, just this model is broken on other website. This website here, Look Into Bitcoin, has still this model holding up. We're in the fire sale level here, a range in blue, so it's a good area to buy at, of course, and DCA in. If you believe the macros don't matter at all, then you can definitely load up more. Let's move on to the hold waves. This shows the in and outs of the short versus long-term holders during boom and bust cycles. I like this chart. So if we look at previous bottom here in 2015, when we bottom here, we saw a lot of holders really they picked up the Bitcoins near the bottom, and that flooded the market. And then after that, you see here, let's look at here at the bottom here. So the 1 month to 3 month, we see when we bottom, we had a big bump here near the bottom at 160, and then that bump, we see here the holders, they sold down their Bitcoins here, and really they sold it down entirely. And if you see here the 1 week to 1 month, same thing. We had a bump, and then we had a big drop here. And if we look at 2018, same thing. When we dropped to 3,000, we bottomed there. We had a big spike here on the supply of Bitcoin, and then we dropped down. We had actually on the 1 month to 3 month, mainly we see there was a drop here right after to 7%. And the 1 week to 1 month has had a drop as well to 6-7%, and same for the 1 day 1 week. In this case here, we don't see right now, if we look at 19K to 17K, the only bump we see, everything has been flat for the 3 to 6 month. For the 1 month to 3 month, it's been flat, and then after the flatness, we saw a little drop, but that I don't see the similar pattern to previous bottoms really. Just flat, and we're selling down here. The only one that I'm seeing is similar to previous patterns is the 1 week to 1 month, where yeah, the holders have dropped down to 3%. The Bitcoin. So really, this isn't conclusive here, so I wouldn't take this into account big time. It doesn't state that we have capitulated or bottom just yet. It's inconclusive, really. Let's go to the 1 year hold wave. Yeah, so this one it looks at the percentage of all Bitcoins that have not been moved from one wallet to another for at least 1 year. So in this case here, really, we had two tops. There's no red ribbon here to indicate that, yeah, we hit like really the ultimate top here. The top could have been here at around March, or at 69,000 around around roughly October 2021. And the green, let's look at the bottom here, potential. So we have roughly, if you look at previous bottom, there's a green circle here that happened. This was like a hold of 1 year hold, 51%. In this case, we had 53% back in 2015 to 2019 against 54. In our case here, there's no green ribbon, but I can only guess, assuming this is the bottom, like I've pointed out before, assuming this price model only, then you're looking at 65% year, 1 year plus hold. I mean, that would make sense given that Bitcoin has been now in mass adoption. You have a much bigger market. Yeah, a lot of people are aware of Bitcoin, which is quite the opposite in the previous year. So now we have bigger audience, bigger market cap. So maybe that makes sense. But if this is the bottom, I mean, this model is saying, yeah, sure, we could be bottoming here. Now we can't. This again has not been a recession, so we can't really rely on this model entirely. The pi cycle top and bottom indicator. This has been quite accurate. If you look at previous bull markets, for instance, there's the orange line here that indicates the top that printed out right here once the moving averages have crossed. And that indicates the top has happened at 64,000 back in April or roughly May 2021. The bottom here, can we say we're bottoming just looking at this indicator? Yes, it's possible. Potential double bottom or Adam and Eve developing here. Typically, I've said in previous video, it's maybe a good time to buy if we're able to hit that yellow moving average, which is currently sitting at, you can say at $21,000. So if we go above 21,000, that's not a bad time to actually buy. You can buy here as well, around 18,000. But if you look at previous bottom, why I'm saying that is, for example, if you look at just the pattern itself and the moving average, when we bottom in 2019 and we tag that orange moving average and we just stay there in sideways, then we moved very fast above it. That was the bottom, and we just rallied big time from there. Of course, this is a different time. The macros were not bad at that time, so totally different from here. This actually, because of the macros, we can say either we're gonna repeat a move similar to 2015 with a lot of sideways. Should we hold these levels without making new lows below 17,500? So we could see probably something like 2015 happen for like 5 months or 6 months of sideways and some consolidation in that area and reaccumulation. So we might see a rally to 21,000 develop, or maybe go revisit the highs, which is roughly at $25,000. Should we stay here and hold that bottom without putting lower lows? So I can see that happening, yeah. Again, as long as we don't violate that low that we have currently at 17,500. So we could see at 21,000 if we were able to make it above, and then we can hit 25K. That could be the top, and we could go back down and revisit the bottom. So it really depends, but we could even rally a little bit higher, like to maybe 27Ks, but I see that a little bit difficult. So I would say 21K and 25K would be the maximum we can get to. Like 25K would be the maximum we can get to, or above or past, view the macro situation globally. Yeah, so something similar to 2015. Of course, I'm still thinking we see another leg down. That will be mark the bottom at 12,000 to 10,000. That's still my what I think will happen. I have not changed my mind yet. Of course, I could be wrong. We'll see in the coming month what if anything changes. I'll let you guys know. Fear and greed. I won't spend too much time on this. So it's been indicating fear all the way down since 2022. A lot of people have been calling the bottom accordingly, with looking at the fear and greed indicator, with fear plummeting below 20 or hitting 10 or 6 all through the whole 2022, all the whole year. So these guys are still telling you that we bottomed here, and they're saying we're gonna get a big rally out of here. I don't know if that's really gonna happen, but right now we've been consolidating. It does look like a bullish reversal could be happening if we can take out 25K. But again, I'm seeing that very difficult thing to accomplish right now. So yeah, I mean, we'll see. We could get a rally here again, like I said, but this doesn't really help us here in this case with the recession and the whole macros globally. It could go either way. So really, this indicator cannot really be helpful here. So if you take the trade, but it's just stop loss below the lows on Bitcoin at 17,500, below 17,500, or otherwise just stay out for now. There's no rush really to get in, guys. Funding rates, let's look at the funding rate graph here. Again, I mentioned this countless time before. The funding rates, if you look back, it indicated capitulation back in July 2021 with those red spikes here at the bottom hitting minus 0.03. And if you look at the COVID crash back in March 2020, we see a big spike down to minus 0.03 as well. We don't see anything in the past, like the whole 2022, I don't see anything in that scale. We haven't really, this indicator has said we have not capitulated. So I'm still kind of in that, I think that way as well. We have not yet bottomed. There's no proof that we did yet, unless we manage to take out 25Ks and go higher in the coming month. So it was really, yeah, this indicator is super clear on that. And the other one that is on that same idea is the spent output profit ratio, SOPR. Again, this indicator, just a reminder, looks at the investor selling for a loss and profit. It's showing that people are trading at a little loss, but again, if you look closely, it does not show, like previous capitulation bottoms, that we have people are trading really at very, very bad, like at a super bad loss, like in June 25th, 2021, or the previous, the COVID crash, right, March 2020, where it spiked down to 0.91, or the previous bottom in 2020 of the bear market in 2018-19, where we spiked down to 0.098 roughly, or 0.91, or the previous bear market of 2015, where we spiked down to 0.90, 91, a little bit higher, maybe 96. Anyways, there's nothing here that indicates people are in much pain yet. So I'm reluctant to say that all these indicators are showing us, at least those ones that I've reviewed with you so far, not all of them are aligning that this is the bottom. I think we should be more patient. I'm a long-term bull, guys, but short-term, I'm trading cautiously here. Cash is king, and we just gotta be careful. That said, we are in the bottoming range, right? Remember, Q4 typically comes November, December, January is a bottoming range for Bitcoin through the years for the bear market. So we are getting close to that, and right now we're October. So I would say just be patient a little bit more. Things will be clear in a bit in the next few months. So yeah, just let's be patient. Let's move on to the Puel multiple. This method looks at the Bitcoin miners and how much revenue they are making now versus the last 12 months. It's a great tool to find the cycle tops or bottoms and see where the miners have capitulated. I'll skip right away to the green area. Obviously, that green area shows through the years when the Bitcoin bottom price-wise, the miners have actually at the same time capitulated, and we see that drop in revenue reach capitulation or the green area or green range here of 0.33 back in 2019, bottom of the bear market, or 0.31 in 2015 during that bear market as well. And in 2011, we bottomed also at 0.31 on that Puel multiple. Currently, we hit roughly 0.34 and we spiked back up above it. A lot of people are turning bullish because it's very similar to previous bottom that have developed, including the the COVID crash in March 2020. Now, again, this indicator is great, assuming there's no recession. What happens if really we're in a recession? So far, it has not been tested. So this is the first recession we're in. It's a very unique recession with all the global macros that we have, very kind of similar, reminiscent of 1970. So we just have to be cautious. So if you're buying, just make sure you don't fully load up. Make sure you are dollars cost averaging in and being patient and manage your risk properly. All right, let's move on to Bitcoin hash rate. Wow, that's a big spike in hash rate, guys, since the last time wow. This is like what, 188 million in hash rate for the 7-day moving average. And we went to 264 million. That's 40%, roughly 40% spike in hash rate. I think this could be related to the news I've read recently about, first of all, you got because of the bear market, the cost of the NVIDIA and AMD graphic cards have actually plummeted. There's no demand since the miners have shut down and capitulated and shut down some of their mining equipment. So I think what's happening is the cards have dropped in price big time, more like 20%, maybe even more since early 2022. And I think a lot of people are rushing to buy those NVIDIA and AMD cards that are flooding the market on eBay and stuff. So, and I guess people are just buying them because they are cheap and they're turning them on again. So that could make sense. And I've read, I think that Bitmain has dropped their price for the miners to try to offload some of the, help the miners and if they want to purchase mining equipment. So they dropped the price. Everything has dropped in price. So I think that could explain what's happening here. But anyways, can we use this chart? I mean, really, if you look at the 2018 bottom on Bitcoin, we had a drop in hash rate, more COVID, and then slowly here, you see the hash rate recuperate, and then with it came the price of Bitcoin, and the rally happened as well in 2018. Unfortunately, I can't go back further on this chart. It's just a flat line here because the log scale. In March 2020, we see also a drop in hash rate, but that was, and then we see that right away recuperated, and Bitcoin recuperated, after the subsequent month ahead. So, and there was another drop in hash rate, but that didn't affect Bitcoin in any way after that rally happened back to the $10,000. And then we kept going up, and there's another drop. But here what's interesting is came June 2021, Bitcoin dropped and the hash rate dropped, but there was also the China ban on miners, right? And this was like pretty much a historical thing that's never happened. That this is a huge drop in hash rate. And then you look here now recently in June 2022, you had a sharp drop in mining, which could indicate that that this is a potential bottom. But the thing is, guys, if you look at previous bottoms that develop, if this was the bottom, even if we want to look at 2019, and if you want to compare March 2020 to this, if we had that spike down, this is the bottom, the hash rate has recuperated very fast, but the market has not recuperated as fast at all. Not similar to 2019, not similar to March 2020 when the hash rate recuperated fast. The market here is literally flat. It has not recuperated as fast as the hash rate. So I don't know. This tells me that if this is the bottom, we should be careful because the market is flat and the hash rate has spiked 40% and the market is not following. So that's not a good sign. We should be cautious. That's all it tells me. All right, that's it, guys. I mean, if you like this video, please leave a like, follow this channel. In the description below as well. Remember to, if you want to invest in our Bitcoin hedge fund, please do so. Click the link in the description below. Follow my channel as well in the description in the video below. I have YouTube and Twitter, and definitely follow me on more active on Discord, so make sure you follow me there. All right, that's it, guys. Take care and happy trading. I'll be issuing actually a Bitcoin video sometime this week, a market update on Bitcoin, and another on Ethereum pretty soon, so stay tuned. All right, take care, folks.